$450 million startup of the Indian startup ecosystem has crashed. Ladies and gentlemen, I am talking about ZestMoney, which was basically a fintech startup which operated in the operated in the category of BNPL, that is buy now pay later, has decided to shut down its operations from the month of December. This startup was actually valued at $450 million and the last fundraise was basically around $50 million. But how did this happen? Why exactly did this happen that a startup with such a high valuation, with such incredible numbers, has finally decided to shut down its operations? What exactly went wrong? What are the primary reasons why ZestMoney has lost its edge and is finally shutting down its operations? And what are the business lessons that we can derive from ZestMoney's failure story? We'll understand this in today's video. This business case study about ZestMoney's failure is brought to you by the B School, your online business school. Ladies and gentlemen and the students of business, before I proceed with the case study, let me explain you the segment. What exactly does BNPL mean and what exactly do these startups which operate in the BNPL segment actually do? Ladies and gentlemen and students of business, as I told you, BNPL stands for buy now pay later. This industry is a very new industry in the entire fintech space, and this industry has actually not originated from India. This industry initially started out from the West, from the US markets, wherein the entrepreneurs, the founders, basically saw a huge gap in the finance market of the country. Let us understand this gap, let us understand this problem with a simple example. Ladies and gentlemen, let's say for example, there's a person Ram who is basically 20 years old. Now Ram wants to basically buy an iPhone, but in order to buy an iPhone, he must have 1,50,000 rupees in cash. Now the alternative way to buy an iPhone is basically through EMI options, through financing. Now in order to finance that iPhone, in order to finance a commodity, the guy can basically go for a loan or basically can go for a credit card. But what about those people, what about that segment of the population which is completely devoid of finance, which is basically completely devoid of any sort of credit cards or any sort of loans from commercial banks? What about that specific segment of the market who does not have finance available, who does not have financing options available? How will that segment of the population buy an iPhone or buy any sort of specific commodity on EMIs? This was a problem that the founders of Zest basically encountered, and they decided to build an entire category altogether which came down to buy now pay later, when these founders basically built out platforms, built out startups which help this youth community, which help these people who were completely devoid of finance, basically get finance from their startups in order to buy certain goods and services, for example an iPhone. So basically by using this BNPL service of a specific startup, any person can buy any sort of gadget, any sort of electronic, fashion commodity, a pair of shoes or anything of desire by using financing options available on these startup platforms. This is basically how the BNPL industry, or the buy now pay later industry, as the name suggests, operates. Now ladies and gentlemen, ZestMoney was completely built around this model of BNPL, and it was one of the first startups to basically initiate BNPL model in India. This is one of the reasons why ZestMoney got so much love and so much of encouragement from the founders community, from the investors community, from the Indian startup ecosystem, and were able to raise millions of dollars in funding to basically scale up their operations and to basically make the people of India aware about this BNPL category, the new thing in the fintech market. But ladies and gentlemen and the students of business, what exactly went wrong? When this segment was so popular, it was so popular in the West, and ZestMoney was one of the early adopters of this business segment in India. What exactly went wrong, due to which ZestMoney is now forced to basically shut down its operations? Let us understand the main reasons behind ZestMoney's failure with three main pointers. Number one, the problem of business model. Ladies and gentlemen, I basically explained you how this BNPL thing operates, how this BNPL entire business model operates, and as I told you, this BNPL segment has not originated from the Indian market. Initially, it got originated from the West. Now guys, let me tell you one more insight. as of today, the entire BNPL industry of the world, on the global level, has actually collapsed because of this major flaw in the business model of the BNPL startups. Ladies and gentlemen, as I told you, BNPL startups basically cater to those segment, those people, those youth people who basically are completely devoid of credit and are not basically in hold of a credit card or alternative financing options from the traditional sources in the forms of loans, etc. The problem with this entire business model is basically the kind of people that these business models, or the kind of people that these finance startups, these BNPL startups target to. As I told you, these people are completely devoid of credit, and if you basically analyze the why factor, that why basically are these people completely devoid of credit, you will get to know that this population, this youth segment, basically does not have any sort of stable source of income available, due to which banks or any other of the players are not offering them any sort of credit cards or any sort of alternative financing options. Now, for example, Ram, as I told you in my example, Ram is that guy who my BNPL startup is targeting to. But Ram is that guy who basically has no options left of financing his iPhone. And why is that? Because Ram is not having any stable source of income to pay off the debts of credit cards or any sort of loans, and banks and all these fintech companies already know that. That is one of the reasons why Ram was completely devoid of credit in the first place. Now my startup enters and basically says that I want to give credit to this guy Ram, I want to help him finance his iPhone, but the problem is the income source is still not there. Now, because Ram or all of these people who these BNPL startups target to, as they do not have any stable source of income, as the entire TAM, as the entire target market of these startups are those people who are devoid of credit, and as these people do not have any sort of stable source of income, the problem is basically with paying back the debts that are taken from these BNPL startups. As Ram does not have any stable source of income, even if he gets an iPhone finance from my startup, it will be very difficult for him to pay back those debts in the form of EMIs. This is the reason why, if you basically analyze very closely the books of accounts of these BNPL startups on the global level, and the reason why BNPL industry altogether crashed down, you will basically realize that the problem, the major flaw, was the business model. Because these people do not have any stable source of income, they were not able to pay back their debts, and that is why the NPAs, non-performing assets, of these fintech startups, of these BNPL startups, were very high, due to which they were an incredible amount of losses. If you check the books of accounts of all these fintech players in the BNPL segment on India's level as well as on the global level, you'll found out the same thing, that these startups had very bad loan books. They provided credit to these number of people who were in the youth segment, and those people were not able to pay back their EMIs, due to which these startups, these BNPL startups, suffered incredible amount of losses. And this was one of the major reasons, first reason of why ZestMoney crashed. Reason number 2, the problem of capital. Ladies and gentlemen, by now you must have understood the entire BNPL business model, and you must have got this insight that in order to start a startup in the BNPL category, you actually need a lot of funds, because you are supposed to finance the goods and services of other people. It is basically a very heavy capital intensive project, and in order to start off such startups, you need incredible amount of fundings in the very first place. Now, ladies and gentlemen and students of business, as you might be aware of today's dynamics, of today's macroeconomics that is currently going on the global level as well as on the India level, you'll realize that currently in the markets, specifically in the startup world, startups are not able to raise capital due to a multiple of factors, and primarily because investors are not willing to pour money in loss making startups anymore, because of multiple reasons. Again, because of economic crisis, because of recessions, because of continuous wars going on the global level. And this is the reason why a lot of startups, even profitable startups, are not able to raise funds. Now, in such dynamics, when even profitable startups are not able to raise funding for their startups, and they actually have to rely on their own profits, on their own revenues to basically fund their own startup. Do you think that a loss making industry, that is BNPL industry, will be able to raise funds, will be able to fetch funds from the investors? The answer is no. And that is again one of the secondary reasons why ZestMoney basically flopped. Ladies and gentlemen, what actually happened was the fact that ZestMoney soon realized after its business operations, that their startup is actually dependent to a lot of extent on the external capital. Only if they have incredible amount of funds sitting in the bank, only if they have incredible amount of funding rounds coming up from the investors, then only they'll be able to finance the goods and services of their customers. Now the problem with this segment was basically that if the fundings are not available, if the funds are not available, and if the entire world is facing a cash crunch, a funding crisis, this industry altogether cannot operate. ZestMoney and the founding team tried to a lot of extent to raise their next funding rounds, but were not able to do so. And after a point of time, because they wanted to continue their business operations, they basically started relying on external loans, and in fact they actually raised a loan from PhonePe just because they wanted to keep their business and their business model float. But can you actually build a finance company by relying on loans? The answer is no. When the venture capital has dried up, when the investor funds are not coming in, and you are relying for the funds part, you are actually relying on loans, which is adding to another overhead of interest payments that actually brings your startup to an incredible point of crisis. And that is exactly what happened with ZestMoney. Ladies and gentlemen and students of business, problem number 3 as to why $450 million valued startup ZestMoney failed: the problem of management. As I told you, ZestMoney was in incredible need of funds, and due to which they tried on raising a loan from PhonePe, and they actually raised a loan worth $12 million from PhonePe in the initial stages. But again, due to such a capital intensive business model, they were not able to secure further fundings, and the founding team finally decided to make their startup get acquired by some of the big fintech companies. So initially they approached PhonePe for a sellout, and PhonePe actually agreed to buy ZestPay, and I am talking about 6 to 8 months past. This actually happened that PhonePe was ready to acquire ZestMoney, but again something terrible happened. ZestMoney had no funds left in the bank. They were at the last stages of getting acquired by PhonePe, but PhonePe found that the books of accounts of ZestMoney were actually manipulated. The kind of numbers, the kind of user base, the kind of NPS that were visible in the books of accounts were actually flawed, and due to which PhonePe decided to back out from the acquisition deal. This was the last hope of ZestMoney and the founding team to get an exit and to keep their startup afloat, but even that did not happen. PhonePe decided not to acquire the startup, and ZestMoney at that point of time had no funds left to continue their business operations, and that is when something very terrible happened. The founding team of ZestMoney, which consisted of 3 founders, decided to quit their own startup. Ladies and gentlemen, can you imagine how weird it sounds? A founding team, the founders of a startup, quitting their own startup because they did not have much funds left, and in spite of all these board members in their startup, the founders of ZestMoney actually quit the startup 6 months back. When the founders of ZestMoney quit their own business, quit their own startup, the board of directors decided to bring in another team of members, another team of people to manage the business operations of the company. But this was again a very bad idea. Why? An entrepreneur, a founder who has started a startup, who has nurtured the startup, actually knows how that startup will run and actually knows the vision and mission behind that startup. And if you bring another external team to manage that startup, that actually won't happen. And it did not actually happen with ZestMoney as well. And 6 months down the line, we finally hear the news that ZestMoney is shutting down its operations in the month of December 2023. Ladies and gentlemen and students of business, this was the entire case study of Zest Money's incredible failure and how a $450 million worth of startup suddenly crashed and is now getting shut it down. Ladies and gentlemen, if you found the case study useful and insightful, please like the video, subscribe to the channel, The B School, and press the bell icon to get notifications about all of our business case studies which add incredible value and insights to your business life. If you want regular updates, please make sure to press the bell icon. If you found the video useful, do comment down your analysis and your insights and let me know. This video was brought to you by The B School, your online business school. I'll see you guys in another business case study. Till then, take care, stay tuned, bye bye.